So let's get started. We've got little time. In the very first module we'll be talking about understanding the Forex market. What is it all about, Forex? The first thing we need to understand is this, that on a daily basis, we trade Forex. One way or the other, we partake in the Forex market. Consciously, subconsciously, whichever way, we all take part in the market. So I first will want to make this clear. I love my class being interactive. Why? Because I feel I get feedbacks immediately and I can at the same time give you whatever level of give you answers to the level of understanding you will need. First, if I'm to ask a question, because I know most of us on this webinar are already here and you've attended most of my classes. So I think I don't need to go deep down into that part. Forex means foreign exchange, just a very short form of it. It means foreign exchange. It is what we do when it comes to the exchange of currencies to make profit. It is what we do when we talk about exchanging of currencies to make profit. So what are we going to learn in this very webinar? We'll be learning some certain things. I don't know, my screen is okay. What will you be learning in this very module? You'll be learning the importance of the Forex market, the definition of Forex and its significance in the financial world, the concept of currency pairs and how they are being traded. We'll get to understand the major participants and their role in the markets. Then we move over to the basic terminologies in the Forex market. What are the 1, 2, 3 things you need to understand? The languages. In every industry, there are languages, and those languages are peculiar to how you perform in those industries. And Forex is one of them. We have industries and languages in the Forex industry that you need to understand so that when you start trading, you don't find it confused when you start managing your funds and start making profit from the market. So first, let's start with the importance of Forex, the importance of the Forex market. What is the Forex market all about? The Forex market is that it's a $7.3 trillion market, the biggest in the world, bigger than the American Stock Exchange, the New York Stock Exchange, bigger than the London Stock Exchange, bigger than the Japanese Stock Exchange. Now, combining all of this together, you still can't make, come with the number of volume we have, combining these three stock exchange markets together, you still can't make the number of volumes we trade in the Forex market every day. Why? Because lots of transactions are done in the Forex market. Currencies are being exchanged every day. Firms, international companies, big body companies are doing transactions every day. A company in America will be transacting with another company in London. A company in Singapore will be transacting with another company in Thailand. So these transactions involve the movement of money from one currency to another. Let me give you an example. Let's say we're using Nigeria now as a case study. We all know we have mineral resources in this part of the world. Let me take tin and colombite, for example. And we've got traders all the way from China who are coming into the country to buy tin and colombite. They have their own currency, which is the yuan. The Chinese won't bring their Chinese yuan down to Nigeria to transact. They will have to convert into Naira before they will be able to do whatever local transactions they want to do. So in the process of them converting this Chinese yuan into Naira, Forex has been done. We just exchange currencies. Do you understand? Now, what makes it different this time is they are doing this to make transactions, to buy goods and services and take back to their country. But for us who are traders, we make use of the advantage. We make use of the advantage. We make use of the advantage to get, please, for those who are sending me messages, do not distract the class for now. Keep your questions to yourself. When it gets to the part where we'll be asking questions, you can now send in your messages, please. Thank you very much. So to those who will be, where did I even stop? You just distracted my attention right now. Okay, I was talking about the Chinese trader and the Nigerian mineral ore, Nigeria tin and Olaitan. So if they bring in their Chinese yuan to collect the mineral ore, they'll have to convert that Chinese yuan to naira so they can have the transaction come into play. Now, for us Forex traders, what we do is this. In the place of exchanging, we already know businesses are done every day. What we just do is we make profit out of these conversions. Do you understand? Your ability to understand that one currency at this time is stronger than the next currency gives you an advantage to make money off. Why? Because the economy is being determined by the economy of that currency that is strong. The other determinant is the economy of that currency that is weak. Geopolitical errors, talk of economical factors, policies, decisions being made by the central bank of that same of the various countries. So it brings a difference between the two currencies in which you can now transact and say, okay, I think the dollar is stronger than the yen. I can now make some money off that strength via the exchange. Do you understand now? So in the Forex market, we've got three trading sections. We've got the London trading section, we've got the New York trading section, and we've got the Asia trading section. I like omitting one, but I still don't like omitting that one, which is the Australian trading section. Why? Because the difference in time from the New York closing hours to the Asian opening hours is a bit of 2 to 3 hours difference Nigerian time. And the market don't really move that much at that time, but it does still move. So that is why most times I only bring up the three trading sections for us to know what it is all about. Now, let's go to the part where we talk about the participants in the Forex market. Who are these people that engage in the Forex market? To the next slide. I don't know, my system is hanging. Okay, the participants in the Forex market involves the government, the central banks, hedge funds, banks, retailers, and the brokers. Now, I'll bring the part of the government. Putting in, using the same Nigerian case study, the government decides what happens in the economy of a country. The government decides if they want to boost this economy. And in boosting an economy, it brings about what? Strength in the currency of that country. Taking about your GDP, for example, when the GDP of Nigeria felt low, the Naira had lost strength. A little bit of strengthening of the GDP increases the strength of the Naira. And this GDP increase is being taken by the government policies. Whatever policy the government decides to take today in bringing change or effect the gross domestic product of a country will affect the strength of that currency. And thereby now, let's imagine a situation where we have Nigeria trading with, say, the United States. The United States dollar has been a strong currency for a while. Why? Because the government has been taking strategic measures, strategic policies and decisions that have been placing the dollar in that line of strength against any other currency. Now, these policies, decisions, governmental plans comes in phases in the sense that a government policy might be decided today that will affect the currency today. And tomorrow, another will come out again that could decide the strength of that same currency tomorrow. So a currency that is weak today due to a governmental policy can still be strengthened tomorrow due to another governmental policy. You understand now? So the strength, the participants in the Forex market involves the government, exchange of currencies between two governments. Now, I want to bring this example into play again. We talk of the bond market. The Nigerian government has bonds. They bought bonds, treasury bills, invested in, I think the Euro bond. Yes, we've got in the Euro bond. We've got treasury bills as well. Now, all of these are being done because there are enough funds to go into this market. We're buying the treasury and the euro bonds, investing in the euro bond because we have enough cash. And investing in that, we are doing what at the same time we're strengthening our own currency here, thereby having enough volume to bring into the Nigerian financial sector. Let's go to the central bank. The central bank stands as a major hub for every country in terms of the financial well-being of that country. Financial decisions have been taken by the central banks. They come up with policies, they come up with news events, they come up with decisions that is going to affect how the currency will strengthen, how the currency will have to stay strengthened for a while. Inflation policies have been decided by the central bank. We talk of interest rates, those have been decided by the central banks. So all of these people have their powers in line to make the currencies transaction, the currency exchange move. When you talk of hedge funds are pools of companies that take in lots of funds for people. What do? They manage funds. They stand like an investment hub for these people. Say you have $1 billion you want to invest, and maybe you don't know because of your lack of investment knowledge, you don't know where to put this money into. You could go up to a hedge fund, and the hedge fund will help you do what? Find 1, 2, 3 sectors where they can help you put in this money at an agreed percentage of profit for the year. Now, imagine a hedge fund that is having tons of people coming in with tons of money. They can at the same time pull in the market at a particular direction. You understand why? Because they are putting in a lot of money into the financial market. So going to the local banks, we have our local banks, transactions have been made by the local banks on a daily basis. An example is the affiliation between our local bank here with the Western Union, local bank with transfers. Bring in foreign currencies like the US dollar, exchange it for the Naira here. So you see how these things are being done on a daily basis. Currencies are being exchanged. And these are adding volumes to what is traded in the Forex market all over the world. All over the world. We talk of the retailers, which is the you and I. We go to the Bureau de Change, we go to our booking, we do exchange every day. You come onto the trading platform, you place trades every day. So your $1, $2, $3, $4, or whatever you're trading is adding more value. You're taking part in the way the market flows. Then we come down to our broker like DuPrime, who gives you the opportunity to what? To actively take part in the Forex market via their platform. Now, if you're taking part in trading, trading Forex or whatever, it could be Forex, it could be commodity, it could be stock, whatever, you need a platform, a trading platform to execute all of this. And that is where the broker comes into play. The broker now gives you that leverage, gives you that platform, that ability to say, okay, you coming in, you're partnering with us to make money via the financial market. Here is a platform for you to take part in this. I do hope we're getting this clear. I hope we're getting this. Okay, so we're moving ahead to the terminologies in the Forex industry. Terminologies in the Forex industry. Pardon me, I like writing on my screen. It's just one of my style anyway. So I'll be talking about pips. Pips, for instance, pips, pipettes, they go hand in hand. They go hand in hand. Pips is like saying, let me give you an example. You are a 100-meter runner. The distance you move from point A to point B is measured in meters. The distance you move from point A, let's say this is your point A, you run down to point B for say 10 meters. Now, our unit of measurement here is 10 meters, is meters. The unit of measurement for distance here is meters. Our own unit of measurement in Forex trading is pips. So if we are saying the currency move from A to B at the price value of, let's say here is 1.1234. And here is a price value of 1.146. Let's just assume 468. Now for the market to move from this price to this price, it goes with a distance, and that distance is measured in pips. We measure the distance in pips. We call it pips. We call the distance in pips. So pips is the smallest, not the smallest anyway, is the unit of measurement. Is the unit of measurement for currencies. The unit of measurement for currencies in Forex trading. So if we have, let's assume we have the market flowing from 1.1001, and it's from this price, market came down to about 1.2001. All we need to do to know the distance from here to here is to do what? To subtract. I will have our value in pips. So let's say we're subtracting this and we're having 100 pips. Let's say, yes, we'll be having 100 pips instead of 100 meters. In your normal day-to-day life, you want to call this 100 meter. But in Forex trading, we call it 100 pips. So pips is that unit of measurement. Then we come straight to pipette. Yes, lest I forget, pipette. Pipette is the smallest unit of measurement. The smallest. Why is it the smallest? Now, when we delve into the chart, we'll get some things deeper. Let's assume we have something like 100,011. Now, looking at the 1 point, we've got 5 decimal numbers after that. 5 decimal places after that. Now, in the Forex industry, except for the Japanese yen pairs and gold, Japanese yen pairs and gold, that deals with 2 decimal places. Every other one deals with 4 decimal places. So the list you can see, the list you see behind, let me put this clearly. 1.111. Okay, let's say 1, 0. We have 5 here now. Now this last one becomes I won't put, okay, let me use that term. It becomes useless. Why? Because it is just a limited one. It's not been added to what we have here. We only make use of the 4 decimal places after that point. Just that 4 after the point. Now the list here is what we call the pipette. The list is what we call the pipette. Good. I do hope we get that. Please, if you do get that, type in yes in the comment section. Type in yes in the comment section. Oh, great. Thank you. Heading over to leverage. Now, you sign up an account with Dual Prime, whatever account. Mind you, we have various accounts. We have the ECN account, the STP account, and the Saint account. So whichever of the accounts you sign up, you are given the choice of picking your leverage. I will still come into that. You will notice for some of you who have done that already, you will notice something in this format. Let's start with this. Sorry. Let's start with this. You notice something in this format. 1:50, 1:100, 1:200, 1:500, 1:1,000. What this means is that you have $100 account, and okay, let's say you funded your trading account with $100. With $100, you have $100 account. and you decide to go with 1:50, 1:50, it means for every $100 you have, or for every $1 you have the opportunity of opening a trade worth $50,000 or worth $50 with the broker. For every $1 you have the opportunity of opening a trades worth $50. So if you're having $100 in your account, what does it mean? All you got to do to understand your leverage is 100 times 50. 100 times 50, and that is $5,000. So it means you have the power, you've been given the power to open trades worth $5,000. If you opt in for 1 to 100, the same thing. For every $1 you have in your trading account, you'll be given the ability to open what? $100 worth of trade. $100 worth of trade. So if you're doing 1 to 100, it means you're doing 1 to 100. You can't get a 10, you can't get, except if you're funding with a $10. Except you're funding with a $10, the leverage still works in that manner. Say you have a $10 account. You have a $10 account. And you're picking leverage of 50. Still the same thing. Your $10 account is giving you the leverage of 10 times 50. And that will be what? A $500 worth of trade. $500 worth of trade. Do you understand that now? So it depends on whatever you have in your, or whatever you've deposited, whatever you funded your account with. If you're doing $1,000, say 1 to 1,000, that means every $1 you have in your trading account is worth $1,000 in the broker's account. So you're being given the opportunity to open as much trade as going to worth $1,000 using your $1,000 account. So that is why you tend to see some trades. If you've been seeing some trades on Instagram, Twitter, Facebook, and the likes, you will see where people are opening multiple positionings. Multiple positionings are being opened on one currency pair, on various currency pair. You could see someone opening as much as 10, 20 trades. And you begin to wonder, how much does he have in his account? He's doing that, maximizing on the power of leverage. Now, the importance of leverage is this. If you know how to trade well, like you understand how trading works, it gives you the opportunity to make more money. It gives you the opportunity to make money. That is when you have a good working system verified, you have your psychology right, you understand psychology, and you tend to understand how the Forex industry works. You're bound to make good money using the advantage of leverage. Do you understand that now? Using the advantage of leverage. Heading over to bid price. Bid price. This bid price is the price your broker is willing to take an offer from you. So we say the broker wants to buy from you. Let's assume you opened your chart, your platform, and you saw something on Euro USD. We'll still head over to currency pairs. So just begin to familiarize yourself with these times now. We'll come over that soon. This is a currency pair that consists of the European euro and the United States dollar. So we want to exchange this pair due to whatever signal signs we've seen, maybe predicting that the US dollar is stronger than the euro, so we should be seeing a downward move, right? We should be seeing a downward move. Now, if when you are about entering your trade, you will find prices by the left-hand side of your charts. I would have loved to show this practically. Okay, let me see. I think the market is still on. If I can still share my platform. Let me see. If I still have my trading platform on. Oh no, hell no. All right, I'll still show us this, but let me get the explanation right. So let's say you want to place a trade. On the left-hand side of your platform, you will find something like bid price, bid price. Then you will see something like ask price. Beneath it, you will find something like this moving with the last one counting. As price is tickling, it's counting. We have something like 1 point this, whatever price. They both count at the same price. So if you say, okay, Euro USD is about selling and I want to participate in this, which means you want to sell the Euro USD. Mind you, on your platform, on the trading MetaTrader 4, we'll talk about MetaTrader 4, you'll be seeing something here like sell, and the other side will be buy. We have sell, we have buy. Now, the buy program, when you click on sell, what are you trying to tell the broker? The broker is offering you this price. The broker has decided to buy whatever you want to sell to it at this price. So you are telling the broker, this is the price I want to sell. And at that time, the broker said, it's just like saying you're going to the Aboki, the Bureau de change, you want to exchange your dollar for Naira. You've got various Abokis. They'll tell you their price. If you agree to the price of the Aboki, you do business. If you don't agree, you let it go. You understand? So where we have the bid price in that sense. Now, you have dollar. No, you have Naira. You want to buy dollar. You head over to a Bureau de change. And the Aboki says, maybe the first Aboki you met says, I'm going to sell for you for 450 Naira. And you feel, oh, this guy not shortchanging me. Well, that's good, 450, I'll get back to you. You head over to the next person, and the next person tells you, I'll sell to you for 470, and you think that's a fair price compared to 450. You want to do transaction with that. So the offering price broker is giving you is the bid price, and that is what you're doing, what you're taking, you're willing to take. We head over to the ask price. The ask price is our price where the broker is willing to buy that currency from you. You're willing to buy the currency from you. So if you have $100, still using the same analogy of the Aboki thing, you have $100, you go ahead over to the Aboki and say, Aboki, I want to convert my $100 to Naira. I need $100 worth in Naira. And the Aboki says, okay, I'm going to give you for 1,000 Naira. The first person says, I want to give you for 1,000 Naira. The second person comes and says, I can't give you for 1,000. I'll give you for 950. Now, you want to do business with the one that favors you the most, which is 1,000. And you now felt, I don't want 1,000. Can you give me 1,100? You are now bringing your own price. You're bringing your negotiation power. I want it for 1,100. If you can't pay 1,100, leave it. And what would you do? You keep going to, you keep searching for anyone who can give you at 1,100. You keep on going to search for anyone that will give you at 1,100. And if you find that person, you and that person will come in agreement and you agree, okay, you take my $100 at the exchange rate of 1,100 and you do business. So that's the way, that's the way the ask price is. The broker is offering a price. Are you willing to sell to us at this price? If yes, place your trade. And if no, you ignore. But most times we don't really take note of this. The only thing we care about is, do I have a signal in my chart right now? Do I believe this trade is going to go my direction? If yes, you go. And if no, you let it be. Down to the ask spread. I hope you understand the part of bid and ask price, leverage, and pips. If you do, please do comment yes in the comment section. So move ahead, please. Okay, good. Thank you very much. Talking about spread, this is just something we all can do. It is a difference between the bid price and the ask price. The difference between the bid price and the ask price. That's what we call spread. So if we have our bid price at 1.2500, let's say 256, and our ask price at 1.2549. So that's the difference between them, gives you what we call the spread. It gives us what we call the spread. It gives us what we call the spread. And this spread is important because it tends to help you calculate your lot size and your stop losses. If I don't know, maybe in our subsequent sections we'll undergo that. On the charts, you see something like this. When we get to that level, you see a red and a blue line, depending on what you've colored yours to be. But mine is always a red and a blue line. And price will be moving. Price will be moving. Now, these two lines, one is the bid price and one is the ask price. One is the bid price and one is the ask price. The difference between them gives you the spread. For those of us who understand what the spread indicator is, you would see in your chart where you might see the spread for 1.4. Sorry, for 1.4. Some will put 14 points, depending on the broker. Some will go in for 14 points. So when you begin to see this, it's the difference between the ask and the bid price that is producing the spread. So we will show you how to incorporate this into your lot size calculation and how to get the mathematics behind it right. Then we'll come into lot sizes. Now, if most of you have gotten eggs from ShopRite before, like you've gone to ShopRite to buy egg, you would see little crates of egg. I think 6 in a pack. Some is 4, depending on which one you want. Now, these eggs have been, why didn't they sell a single egg for you? They should have given you a single egg for maybe 300 naira per egg. But no, it comes in lots. It has to come in lots. Like you're buying it in bulk at certain prices. So if six eggs might go for 1,800, you can have 4. 4 that will go for 1, 2. That is, if we're doing 300 naira per egg for 1, 2. You could have 2. No, let's stop at 4. Let's not do 2 because you can't find 2 anyway. Now, the eggs are being sold in lots here, but in various grades. They sell in lots, but in various grades. And you can see they come in different prices as well. So also in Forex, we trade in lot sizes. There are standards to trading in lot sizes. Now, the first standard we call the standardized lot size, which is 100,000 units. Let me clean this. Standard lot size. Standard lot size. Standard lots. We have the mini. We have the micro. We have the nano. Now, the standard lot size is 100,000. What does it mean? 100,000 units. We have the mini, which is 10,000 units. And we have 1,000. 1,000, and this is in hundreds. Hundreds. Now, the 100,000 unit was the formalized standard lot. Like you cannot partake in the Forex market if you don't have up to 100,000 worth of whatever currency you want to trade. Whatever 100,000 of whatever currency you want to trade. Say you want to trade pound, you must have up to £100,000 in your account to trade. By this doing, brokers came into the picture and they said, okay, I think we need to make this easy for people to take part. other lot sizes started coming up, and that was where we started getting the mini lots, the micro lots, and the nano lots. Initially, there was nothing like nano. It was just mini and micro. But more participants are needed to take part in this market, thereby creating opportunities for everyone. So the nano come in. That is why if you invest your $10, you can always partake in the Forex market. If you put in $1, you can always participate in the Forex market. You come in with billions of dollars, you're there on a high note. You can always partake in the Forex market. Now, this lot size gives you the opportunity to make use of what we call margin. It gives you the opportunity to what we call margin. If you're trading a standard lot size, what you will be seeing, what will be written down on your broker's side of records is you're trading in hundreds of thousands. If you're trading in a standard lot size, you're trading in hundreds of thousands. If you're trading in a mini lot size, within the catchment of a mini lot size, what will be recorded at the back end of your broker is 10,000s of whatever currency you're trading. So also for the micro, it comes in thousands. So also for what's the nano. Now, when we get to that part of calculating these lot sizes, we'll get to see how we calculate lot size and how we make use of them, how we take advantage of them in making more money for ourselves using this, using the power of leverage. Using the power of leverage. Please, I would like to know if anyone has a question to ask at this point. You can type in the comment section. Type your question in the comment section. So, now we've heard terminologies, we've seen, we've understood what the Forex market does and how to partake in it. Now, how do you become a Forex trader? All right, Omoyemi, I'll come over to, we'll get towards the end, I'll talk about the spread and lot size again. Talk about the spread and the lot size. You want to take part in the Forex market. Taking part in the Forex market involves having a platform we call the MetaTrader 4. We call it MetaTrader 4, MetaTrader 5, MetaTrader 4, MetaTrader 5. For those who don't have, you can always download MetaTrader 5. We have C Ninja, we have Trading View, and the likes, lots of them. But here, I want us to make use of our MetaTrader 4. You can always go to Do Prime's website to download the MetaTrader 4. MetaTrader 4 for any version of the device. For any version, it could be an Android phone, it could be an iPhone, and it could be your PC, a Mac, or a Windows laptop. Go ahead, head over to Do Prime website and download this platform. Now, there are just a little bit of differences, except for the Trading View, which is a web-based. It's a web-based platform. C Ninja Advanced. Majorly, what I would say you should make you of is this: the MT4 and MT5, MT4 and MT5. I would even say I would advise you to go for the MT4. Why the MT4? Because it will give you more hands to master how the platform works. It's easy to understand. Then you can delve into the MT5, which is also a very sweet platform to trade from. Very sweet platform to trade from. Do you understand? So what do you need? You need this MT4 first to partake in the market. Very necessary. You need the MT4 to partake in the market. And how do you get this MT4? Like I told you, head over to Do Prime's website and go onto the download section. The download section, you should get this. There's a link there where you can get this downloaded. Even when you sign up an account, you will have the download link suggested to you. So you can always download it there on the platform. Now, if you don't mind me, I always do something. I like sharing my mobile screen so we can see what the platform looks like. First, I'll start with the platform for the PC, the MetaTrader for Windows. For Windows, still the same thing with the Mac. I want to show you what it looks like on the PC. So pardon me, let me share my screen. Pardon me, let me share my screen. Go. Okay. Few seconds, please. What's wrong with my laptop? Okay. Should be up in a sec. Should be up in a sec. Got a lot of things open on my PC, so. Can you all see my screen now? If you can see, type yes. If you can see my screen, type yes. Can you all see my trading platform? No, okay. Let me, good. So, can you see it now? I think it's up. Okay. Oh, good. Thank you, Richard. Good, good. So this is what a metaphor trader looks like. If you look at the top here, you will see this. Where's my pen? Let me denote. Okay. Looking at the top here, this I am cycling right now. Sorry. This I am cycling right now. There's a number here. There's a server here. There's a server here. And we have the name of the company here. And we have the currency pair here. So looking at this account right now, the information is, this is the account's detail number. This is the server. And this is the broker's detail. And this is the currency. When you sign up a live account with DoPrime, you'll be given such details. You'll be given such details. And if you want to make use of your PC, like I told you, head over to the downloading area on DoPrime's website. You will see the download MetaTrader for PC, MetaTrader for MacBook and whatever machine you want to use. Now, you have your platform downloaded on your PC already, just the way this one is. You want to log in into your account. For those who don't know how to log in into your account, all you need to do is come over. Initially, it won't be like this. Sorry, you won't have it colored in red and green the way you have it right now. Let me show you what it will look like. Basically, let me see new order though. Okay. I want to see what I can. I think this is okay. It will come up this way. This is the way you see it initially. It will come like this. This is the very way it will be. Now, when you've not logged in, but when you want to log in, you head over to File, come down to log in to trade account. You've been given details already. That detail has been sent to your email. Your login ID, your password, investor's password, your server. They've all been given to you already. So all you need to do is to come click onto login trade account and you input all the information you've been given. Now let's do an example. I have an information for a demo account. Let's assume I have my login here. This is my password and the server is a demo. All I need is to come click on login. Now I just logged into my account. And as you can see, we have a number running in here. I don't know if any of you noticed it. When I logged out of the account, this thing here wasn't counting. If you notice what it wrote, it was no connection. So it took me out of the previous account I was and logged me into this very account I just logged into right now. Do you understand? Into right now. So it comes up with all of this. Go. It comes up with all of this information. Here is a tree of your currency pairs. Here is a tree of the various currency pairs you want to trade. Let me move this. Yeah. Currency pairs you want to trade. This is Euro USD. This is Pound USD, and this is Australia USD. Do you understand? And this is Pound USD. So you've got different currency trades that you're working on. Here is the information on the trade you've opened. This gives you an analytical statistics on whatever currency pair you've been working on and how it gives you data on how you've been doing on those currency pairs. This gives you an account history of what has been happening in your account. These are news events. We'll talk about news. Alerts, if you have it configured. These are mailbox messages sent to you, and this comes in from the various market of MetaTrader 4. Let's leave that. We don't have anything to do with that. All we're concerned is trade, account history. To the advanced data, you start learning about this exposure. Now, heading over to the major part of the charts, the major part of the trading platform. I want to change this background. Say I don't like this background. It looks bulky. It's not clear. I don't like the way it's looking right now. Okay, sorry. First, before I do that, let me show you a trade. Let's say I place a trade now. If I want to place a trade, this is a currency pair. Let's say I'm working on this one. Let's say I'm working on this one and I want to place a trade just the way I have here. Now there's a trade running here. There's a trade running here. Now, let's say I want to place a trade. I come over to new order. And as you can see, the symbol we have here is what? Euro symbol, USD. The volume, which is the same thing as what we call the lot size. Same thing as we call the lot size is listed here. As you can see, various lot size depending on what your account can carry and the level of leverage you want to make use of. We have the stop loss. I'll still explain all of that. We have the stop loss, we have the take profit. And we have the type of trade you want to place. Is it instant execution or pending orders? We'll still talk about them when we head over to market execution. Then now, I was telling you about bid and ask price. This is a bid price. And this is the ask price. The bid price and the ask price. Can you see them now? The bid price and the ask price. So we'll head over to market execution. We'll work on this. Okay. Now, we've talked about logging in. There are various things you need to work on this MT4 with. Now we have another part which is very important. As you can see, I'm cycling in here too. M1, M5, M15, M30, H1, H4, D1, W1, and MN. We call them time frames. We call them time frames. Where's my? We call them time frames. Time frames means a particular period of time denoted in groups like this is, let me say, if I click on this, let me do this. If I click on this MN means monthly. It means monthly. Every candlestick, everything you see here represents the activity that's happened in one month each. We'll come deeper into that, so I shouldn't confuse you yet. I shouldn't take you that far. It goes in one month, happens in one month. The W1 means 1 week. Weekly, everything happens in one week. I'll go deeper later on. The D1 means daily. Everything happens here every day. Daily. H4 means everything happens in 4 hours. Whatever you see here have been happening in 4 hours. And H1 means in the last 1 hour. Everything has been happening here in the last 1 hour. M13 means 30 minutes. M15, 15 minutes. M5 means in the last 5 minutes. And M1 means in the last 1 minute. Now, this part, that's for the time frame. Coming down to this place, there's a button here, this F button. We have what we call the indicators. When you click on it, it gives you the various indicators you can make use of. We'll talk about it, we'll get to that part too. How to use indicators. We have the currency trade. This is a currency trade. You want to see the various currencies you'll be trading. All you need to do is to come this button here. This button here, we call it the market watch. Just click on it, and as you can see. Now, if you're opening your chart for the first time, you might not see all of these currencies. All you need to do is to right click in your mouse and click show all. Right click and click show all. And it will show you the currency pairs you have. We've not talked about currency pairs. After now, we'll talk about them. And it will take you into, you will see all the currency pairs. Now, if you look at everything here, what you're seeing here, Aussie, NZD, and all of these, USD, JPY, these are currency pairs. Heading down, you begin to see other things, indexes, US 30s. You see metals, you trade commodities as well, gold, silver. Going down, you begin to see stock exchanges. You begin to see crypto. So dual prime is the best fit for whatever asset you want to trade, be it commodity, be it minerals, be it commodity, be it stocks, be it index, currencies, cryptos. So you can see these are stock exchanges. Can you see Coca-Cola, Boeing, Citigroup, eBay? It all depends on whatever you feel comfortable with. So that's that for that. We have the auto trading. Maybe you have a boat, you have what do we call them now? A Forex boat you want to make use of. You can do that by just automating. You automate and you get whatever results you opted in for. So here I don't want to talk about it for now. This is the platform on the PC. We'll get to the part of where you now see the platform for just a little difference between that on your mobile devices and the PC. But when we get to that part, I'll show you how it works. So let's head over straight to, please, I want to know if anyone has a question regarding this part. If you do, keep your question aside. At the end of my explanations, we'll bring in time for us to answer questions. Let's do a quick one on currency pairs. I think the other time my slide was slow, so I couldn't come up with a slide for the currency pair. So I want to know if you're seeing my screen right now. Are you seeing my screen? If you see my screen, please type yes. Please type yes. Type yes. Thank you, David. Thank you. All right. So we're all talking about trading. Yes, I made mention of a little bit of we trade currencies. But how did we even come up with all of this? Which ones why are they called currency pairs? Why? Now, this is where we answer that part. In Forex, the only thing we trade is currencies. Currencies are the only things we trade. And we've got three classes majorly, but majorly what we make use of is two classes, two major classes. We have the major currency pair and the minor currency pair. Now, why do they call them pair? It is called a pair because it involves two currencies exchanged against each other based on different factors, which could be economical, which could be politics, which could be weather. Because events like earthquake, wildfire can affect the strength and bring about weakness in currencies. So based on different factors, inflation, interest rates, all of those affects the strength of the currency. So now, heading forward to major currencies. Why do we call them major currencies? We call them major currencies because first, I want to start off by saying this. The currencies involved in the Forex markets, majorly like the strong key currencies are what we've listed here. What we have listed here. The euro, which represents the Eurozone, the United States dollar, which represents the United States dollar, the Japanese yen represents the Japanese, the Japan. We have Great British, which is represented by the pound currency. We have the Switzerland, represented by the Swiss franc. And we have the Australia, represented by the Australian dollar. And the New Zealand, represented by the New Zealand dollar. And we have the Canada, represented by the Canadian dollar. So these are the major currency we pair against each other to bring up at about, I think, 28 currency pairs altogether. There are still other minor currencies, emerging currency pairs as well. But these are, I think, the core currencies against each other. These days, we're beginning to see something like the United States dollar against the South African rand. Against the South African rands. This is one of the emerging currency pairs as well. We have the United States dollar trading against the Brazilian lira. So it goes back and forth that way. Now, heading over to currency pairs. Why do we call them major currency pair? We call them major currency pair because each of these currency pairs, 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7, and 8. Now, except for this, the United States dollar, every other currency trading against the United States dollar makes that currency pair a major currency pair. Makes that currency pair a major currency pair. Every other currency trading against the United States dollar. So on the chart, you might begin to see something like this. You might begin to see something like, let me make you something like USD CHF. There could be a slash there, there could be this USD CHF. It could be something like, I'm still heading somewhere, USD slash USD. Now, if you see clearly what I've just done on the screen, You'll notice I said USD. I didn't say United States dollar. CHF, Swiss franc. These are each currency is represented by three major alphabets from each currency. Three major alphabets from each country. U stands for United, S stands for state, D stands for the dollar. This is the Switzerland franc, CHF. CHF. Come down to this one. This is the Australian dollar, AUD, the Australian dollar against the United States dollar. The Australian dollar against the United States dollar. So every other one that comes up, the NZD against the USD is the New Zealand dollar against the Australian dollar and the United States dollar. We have the CAD against the USD, Canadian dollar against the United States dollar. We have the USD against the Japanese yen, which is the United States dollar against the Japanese yen. We have the euro against the USD. So it's saying the euro currency against the United States dollar. And we have British pound against the USD, which means the Great British Pound, GBP, against the United States dollar. The Great British Pound against the United States dollar. Now, heading over to these parts, you would find we have country currencies, their symbols, and their nicknames. Most time, if you find an expert trader, he calls this currency by their nicknames. And if you've done your research to a point, you'll find some of these things are called by their nicknames. Now, if someone tells you I'm trading the dollar against the Kiwi, or I'm trading the dollar against the loonie, these are what it means. The loonie represents the Canadian dollar. Loonie is a nickname for the Canadian dollar. Kiwi is a nickname for the New Zealand dollar. Aussie for Australian dollar. Swissy for the Switzerland franc. Sterling, instead of saying British pound, I just say the sterling. Sterling against the dollar. Yen, instead of saying Japanese British yen. Then we have the greenback. The dollar has a lot of names, but we want to stick by this one. Let's stick by the greenback. And we have the fiber for the euro. Fiber for the euro. So please, do we all understand this part? Type yes in the comment section if you do. Type yes in the comment section if you do. So let's know we're moving ahead. Okay, great, Dave. Great, Omoyani. Great. So, moving to the next currency pair, the minor currency pair. The minor currency pairs are currency pairs that are traded against each other, like the 8 currency pairs being matched against each other. The 8 currency pairs being matched against each other. What does it mean? It means the euro matched against the Japanese yen, matched against the Great British pound, matched against the Swiss franc, matched against the Australian dollar, matched against New Zealand dollar. Currency pair. Euro, Japanese yen, it's a currency pair. We have euro against the British pound. Okay. We have euro against the Australian dollar. We have euro against the Canadian dollar. How many combinations do we have? Are we missing anyone? I think we all have them complete. Okay, the euro against the NZD, New Zealand dollar. So Japanese yen against Japanese yen, that's a euro against
Please kindly hold on. Might be the internet that has kicked him out. He will soon be back to continue with the training. You have been unmuted. Speak. Okay, I think he's back.
Okay.
Let's hold on.
All right, can you hear me now?
Yes, we can hear you. You are welcome back. Somebody's raising hand.
Okay, go ahead, please. I think it's
When
Omoyeni.
I can't hear you, that's why I raised up my hand. So I thought it was my.
Okay. All right then. Sorry for that little break. So we were doing a combination of, I think, which of the pair now? Combination. The British pound against the Japanese yen. We have the CHF, the Swiss franc against, we have the Australian dollar against the JPY. We have the New Zealand against the JPY, the CAD against the JPY. So you can see all of these combinations have been made. All of these are called the minor currencies. They're called the minor currencies. Now you will find them all on the charts. On the charts on your platform, you would see where it's being denoted Forex major, Forex minor, and we have Forex crosses. Forex major, Forex minor, and Forex crosses. Most of the combinations we do are supposed to be here, but if you can't find them here, you come over to the crosses, and that is where you will find them. You come over to the crosses and you will find them there. Do you get that? Come over the crosses and you find them there. Let's clean this. You find them there. So let's head over to the next slide. Now we've talked about the central bank bid price. Now I was able to give an explanation of the MetaTrader 4, but on our next I would have loved to connect my phone so we could do the MetaTrader 4 on the mobile phone as well. But let's see if we can do that in the next class. So we have a little bit feeds on what it looks like on the mobile phone. But I like giving assignments. I like giving because I think this as a class we all want to learn. So I like giving assignments on what we do. The first assignment, which you can see right now, is what are the top pairs to trade in the Forex market? That's your assignment. Please do write this, do write them down. Then the second assignment is this. I'm giving 2 assignments. The second assignment is download, for those who don't have, download MT for the MetaTrader 4, sign up an account with Do Prime, then you get access to your login details, login details. In our next class, we'll do a quick one on how to log in and have access to your account. So for those who don't have, download the MetaTrader 4 on your app, on your phone, on your laptop, whatever device you want to make use of. Sign up an account with Do Prime. Sign up for a live account and a demo account. A live account and a demo account. So you're supposed to have 2 accounts, a live account and a demo account. Then get access to your login. So by tomorrow, I want this submitted in the group, please, if possible. Let's submit this in the group so we can forge ahead. We know where we are. Okay, any question? Yes, go ahead. Okay, thank you for confirming that, Amin. So our next slide will be on, which we've done. We've done this. Now, signing up an account, I already told you how to go about it. Making your first trade, that we'll need to do by tomorrow, because I know majority of you will be working with your mobile phones, will be working with your mobile devices. We are short on time right now to go deep into that. So by the next class, we'll hurriedly do that part. I'll hurriedly show you how to sign up, how to make your first trade, and start using the platform, how to start using the platform. So I think we have come to the end of this module, except for the little exceptions we have, which we'll have to handle by tomorrow. So please do come on time tomorrow. Endeavor to be here on time. We started late today. We're supposed to start by 8 p.m. on dot, but we started at about a few minutes past 8. Please, let's endeavor to be here tomorrow. Now, for those who are having questions for me, can we all indicate our questions, please? Okay, David says I placed a trade today, and by the time I checked the trade, I saw that my account was reading minus. Does that mean that I'm owing Do Prime? No, you are not owing Do Prime. And what account did you open? What accounts did you sign up with? Is it an ECN account, an STP account, or a Cent account? What account?
Go ahead. We have been allowed to speak.
Yes. Oh, okay, go ahead, talk. You can unmute now, but please check your background areas very well. there shouldn't be noise that will interfere with what we're doing, please. Thank you. So, Ame, you can
Right.
talk.
Can you hear me?
Yes, I can hear
Yeah.
you.
You have all been allowed to talk, so let's make it interactive before we end it. Thank you.
All right. So I actually opened my Do Prime account. Somebody who I was learning trading from direct sent
Teacher trading.
sent
Okay.
me the link and I did everything. So today in the class he placed the trade and the trade went again. How do I put this? Okay, the trade did not go as expected.
Okay.
And
Okay.
your account, when I came back, I just found out that the account was reading minus on MT5, so
Okay.
like minus $30 from the initial $100 in the account. So
Okay.
because I just saw that the trade did not, there was no profit. It went in a loss.
Yes.
So
Yeah.
my concern became okay. I know subsequently I will still want to venture into the trade
Yes.
anyway.
Mm-hmm.
But am I owing? It's now looking like I'm owing because since it's reading a negative value,
Yeah.
it's looking like I have an overdraft to pay the price. So that's why I felt like asking to be sure if I'm actually owing, and then so that I could do something in that regards as well.
All right. If I get you properly, you funded $100 account, right? MT5
Yes,
platform. Good.
yes,
And you placed a trade, and the trade went how many dollars against you? $50?
complete $100.
Okay, the complete $100 went against you. So as it
Yes,
stands right now, your account is reading 0 point whatever you have behind it, whatever cents you have behind it, right?
yes, yes.
Yeah.
Reading my 13 point something dollars.
Yes, that means you're still owing minus 13, which
Okay.
whatever way you fund, it will still be there for you. You understand? So it's not
Okay.
like you're really, really owing due prime. It is just a historical record of what you've done with the account. So you're still good.
Oh,
Meanwhile, I don't know if you don't mind me asking this question. What currency pair did you trade that
well,
brought
we
out
traded gold
uh,
USD.
today?
Hello?
Today, right?
Yes, yes, yes.
Okay, that means you didn't know anything about risk management.
Okay.
All
Yeah,
right.
it was just based on what he sent that I placed the trade and
Okay, no problems then. Yeah, no matter what trade, even if you place your trade by your own signals or from signals outside, if you understand the part of risk management, you shouldn't have blown $100. But that is why one major reason why we're organizing this webinar for you guys. So you get to understand all these little tricks of managing your account successfully. Do you
okay.
understand that?
I
Yes.
will certainly attend the class today, and I'm not running away. This is
Good,
an opportunity
good.
for me.
That's good then. Any other person, please? Any other person with a question for me?
Okay, if I may contribute to what
Ahmed just said, okay.
hello. If I may contribute to what Ahmed said, it means you follow the trade in the group you are, right? And it
Yes,
blown the account. It blown the account.
yes,
And you have a negative in your balance.
Yes.
yes,
Is that?
yes, sir.
So what that means is that if you have minus like let's say like minus $2 in your account balance right now, any other time you fund that account, it will deduct that $2 from
That's
it.
two
Thank you.
dollars. Yeah. Do you understand that
Okay,
now?
now, yes, I understand. But when I
Uh-huh.
checked my Do Prime account, I get to me.
Yes, go ahead.
When I checked my Do Prime account, there was no negative value in my balance on Do Prime. But on
Okay,
my
there is
MT4 is where
no,
my
it
MT5 where
will, don't worry, it will rebalance. It will rebalance with time. It happens, that happens very well. Like the trade would
Okay.
have done a thing, then it will not update the recent thing you have. But later on, when you go back to check, maybe you could check probably after the class this evening, it might have rebalanced itself again. You understand?
Okay. Okay.
So that happens often. So any other person with a question, please? So that means we all understood what we did tonight. Please, I want to still encourage us. Tomorrow, we should endeavor to come early. We still have a lot to cover in this module 1. Some little tidbits we kind of not no opportunity to do today. I want to cover them before we start the module 2 tomorrow. And the module 2 will be on fundamental analysis. We want to see what affects the market and how it affects the market and how to take the opportunities during those times. You understand? So it will be an interesting class tomorrow for us all. Let's endeavor to be here on time. Kindly allow me invite my boss over. Sir. Hello, sir. Hello, sir. There. Mr. Olaitan, sir. Okay, I think he just went out of the class. Please, let's endeavor to be here tomorrow. I'll really appreciate us, and a reminder will be sent to the group too. A reminder will be sent so for all of us to be part of this. I really appreciate your time. Okay, yeah. Someone said I should do a quick recap. Yes, I'll be having that recap tomorrow if you don't mind. Let's do that recap tomorrow because I need you guys to come here. So don't worry, you'll be getting a message will get across to you soon. A message will be getting across to you soon. So don't worry regarding the group or whatever. You have a message being passed across to everybody here. And for the recap, we'll get a recap tomorrow. All we did about this, we talked about currency pairs. We talked about currency pairs. We talked about the Forex market and how to be a part of it. We talked about the major players in the Forex market. And we did a little bit of the platform presentation. We'll be going in depth tomorrow by the special grace. We'll be working on the mobile. We just did a few on the laptop today on the PC. We'll be doing more on the mobile, which I know most people will want to work with. So we want to cover that part and make it accessible to everyone as well. Yes, you'll be gotten across to with that, Emmanuel. You'll be gotten across to with that. So if you don't mind it, okay, I think my boss is back. Sir, there's questions down the message link. I don't know if you don't mind answering them because I feel you're in the best position to answer them, sir. So I'm handing it over to you. Okay, I don't think my boss is here. Anyways, so whichever way we'll... Okay, yeah.
Okay, let me quickly take that question. If okay, if any one of you is not in any group right now, we have channels. We have our WhatsApp group where we...
I think there is network error here.
I would like to join the link, sir.
Okay, yes, it was about saying something regarding the link, and the link will be sent across. I don't know, his network is bad. He has a bad network. Yeah, you all will be added to the group. You all will be added to the group. We have a trading channel and we also have a training channel. So you all will be added to the group so we can monitor your progress. We can monitor your progress and keep tabs with you guys. This is what I think we will do. By tomorrow, please endeavor to join this class tomorrow. So details will be passed across on how you can become a member of this group, how you can join this group, and how you can join the trading channel as well. Do you understand? You understand? So I think in the absence of any question, I want to say thank you all for being part of this, and we appreciate you all. We love you, and we expect to be here tomorrow for another wonderful section like this again. So I wish everybody a wonderful night rest, and see you guys tomorrow. You're welcome, David. See you guys tomorrow, and you all have restful nights. Thank you so very much.
So sorry, I think the internet is so bad on my end. So quick one, I will
Okay,
drop
please,
my...
you can all come back, like my boss is around. Sir, go ahead, sir.
Okay, I will drop a WhatsApp number now. You can chat me, then we'll be able to follow up with each other, then add you to the group where we exchange details, information, and all the rest of them like that, so that we can do follow up from there. Thank you very much for attending this webinar. We really appreciate you. Here is the number. In case you are not in Nigeria, I'll put the Nigerian code there so that you can easily chat me and get the number. That's the number coming up. That's my number. So have a wonderful night. We appreciate you. So tomorrow be early enough so that
that's the number there.
That's the number there.
+234.
I've dropped the number there.
7052220691.
Yes, just say hi to me, then we'll be able to know what to do from there. Thank you very much.
On the group, sir.
You add the number, add this number, chat him over, and you will be told what to do. Do you understand?
See you tomorrow.
All right.
So have you all gotten the number before I end the... Have you all...
Please, I'll call it out. Call out the number, sir.
Okay, +234
070 522 06901.
Again, sir.
070 522 06901. That's my direct number. Thank you. Have you gotten it?
Yes, sir. Thank you very much, sir.
All right.
Okay,
You're welcome,
see you tomorrow.
Good night,
Bye.
sir. Bye.
Happy night, sir. Yes, sir.